All right. Matt, the mortgage guy. In today's video, I'm going to talk to you about the pros and the cons of a first and second mortgage loan combo. When I say combo, a lot of these lenders will write a first up to a certain loan amount and then write a second mortgage right behind it, use it in combination versus a jumbo loan. So I'll talk about the pros and cons of those first and second, the pros and cons of those things versus a jumbo, what type of neat products are available that might get you a cash out refinance to 90%, or a purchase loan up to 90%, meaning you're only going to put 10% down when you purchase by utilizing the first and the second, or on a refinance, you're able to pull out up to 90% of what the home is worth. Before I jump into the video, if you like straightforward content from a mortgage broker who's in it all day, every day, someone who's just trying to provide value and empower you through education, please consider subscribing to the channel, like, comment, share it with someone who you think might benefit. Let's jump into it. So today's video, like all videos, I see something, I have questions about it. If a handful of people are asking me personally, calling me, texting me, emailing me, I know there's interest out there and other people want to hear about it. So I press play, I record a video, and I talk to you about what I feel about some of these products, where it might benefit you, where you might want to watch out, pros and cons type stuff, right? So these things aren't new, but I'm seeing more and more prevalence of 90% loan to value. And to clarify that for anyone who doesn't understand, if you have $1 million home purchase and you finance 900,000 of that, and you only put 100,000 down, 10%, that's a 90% loan to value. And the same applies if you're doing a refinance. If you have $1 million property that's worth $1 million and you owe 600,000 and you want to pull out 300,000 and have a new loan balance of 900,000, that's a 90% loan to value. So in past, when there wasn't loans available like this where you could stack a first and a second, most of the time you were capped at 80% loan to value. At first, I'll talk refinance. With these, you are able to put a first mortgage on the home of whatever number you'd like, and then take a home equity line or a second mortgage and put it behind that first, all the way up to 90% loan to value. Allows you access to that equity. Now, you probably want to know pros and cons and whatnot. The immediate con that you should think about is it's more risky, right? When you owe 90% of what your house is worth, owing more money generally means larger payment. Owing more generally means more risk. Owing more generally means if there's a job loss, if there's an economic downturn, if there's a downturn in real estate, things we don't expect to happen, but they could sometime in the future. And I should clarify, right? We don't expect a real estate downturn. We could very likely in the next couple of years see some sort of economic downturn or recession, but I'll save that for another video. So you want to be careful. You don't just want to go out there and leverage your home up to 90% for no good reason, right? That would be a con. A pro is that when you have an asset like a home that's worth $1 million and you only owe 400,000 on it, you've got 600,000 in tappable equity. That for most investors or for folks who are comfortable around handling money, who are comfortable with managing debt, they want to take that money and they want to go put it in something. They want to go invest it somewhere. They want to redeploy that capital and go make a return on that capital. So in that case where you owe 400, you might want to do a cash out up to 800,000, up to 900,000. Take that capital. There's a business you want to start. There's real estate investment opportunities that you want to go pursue, right? Ability to do that is something that I think is at least nice to have the option, correct? So happy to answer anybody's questions if you reach out to me and my team about the specifics of the product. As you guys all should know, greatmortgagebroker.com, fill out a quick form. Me and my team are more than happy to help. These products, if you've got good credit, this home equity line that sits on the back and acts as a second mortgage, you're going to have a interest rate somewhere between 4 and 5.5%. If the loan amount is smaller, sub 150,000, there's going to be a hit to the rate. If your credit is less than 760, there's going to be a hit to the rate. But if you're doing, $150,000 plus, you've got a 760 plus credit score, your rate is going to be down in the low 4% as of right now. This prime rate I hear is going to change on March 1st, so don't hold me to it. But that's the case for the time being, right? And so that's a little bit on the refinance. That's a little bit about going cash out to 90%. The last thing I'll say about refinance is what you're generally going to do. Let's take that case of the $1 million property where you're doing cash out to 90% up to 900,000. You're going to do a $647,200 first, because that's the conforming limit where you're going to get the best terms. Then behind that $647,200 first, you can do this home equity line of credit second mortgage that's going to be the other $252,800, right? And again, this is a 40-year interest only for the first 10 years, and then it goes to a 30-year AM after 10 years. A big pro of that is that you're going to have a really small payment on it, right? Because you're only paying the interest. Nothing's going towards principal. Then it converts to like a regular 30-year term after the first 10 years. Most folks who are moving money around doing investment type things are not staying in the same loan for 10 years. So you could probably count on the fact that you're going to be in something else by the time that comes around. So anyhow, that's a little bit of information there. In terms of the purchase, it's going to work relatively similar, right? We're going to have a 647,200 first in a lot of counties all over the place. That's just a national number. There's going to be high balance loans available, some Bay Area and Southern California counties where you can go, 900,000 plus on a high balance loan. But for, the rest of the markets that are capped at 647,200, if you want to buy $1 million property with 10% down, you go 647 first, 252.8 second, and that way you're able to finance 900,000 of it and put 10% down. The first is just like a regular conforming loan. The second is going to be this home equity line of credit with a rate somewhere between 4 and 5.5. These things are done concurrently. These things are all packaged together and underwritten by the same team. So it's not like it's a, complicated process where you got to go get one loan underwritten and approved, then the second one underwritten and approved. It's all done in Symmetry. Symmetry Lending is who writes these seconds, right? So the lender that I work with who writes the first, has a process where they kind of bring Symmetry into the fold and do it all together. So I don't want to get into too much detail because it's really like one of those things where if it's a product that might work for you, if you're looking at, buying something in the jumbo range with 10% down, then you want to get information based on your specific scenario. If you're looking to do a cash out refinance up to 90% and you're, a candidate for that, you also want to look at your specific scenario. So if we can help in any way, more than happy to. Go to greatmortgagebroker.com, fill out the quick form, let me know where you are, how we can help. Look forward to talking to you. And until next time, we gonna see.